Avon up 81%. This is all in 2019. Now, ironically, Pier 1 had some bad news today, and this sort of underscores the risk-reward of buying into these names. But many investors I know always want to buy them. They come to me and say, Charles, Pier 1 looks cheap. And if they bought it in January, they were right. Let's ask Danielle Shay. She's back with us. And, you know, these names, they're household names. They were hot at one point. I mean, at one point, Pier 1 was untouchable. The stock went up for years until people gave up on Wicker. Right? So you're too young. That was me up before you got probably went into the furniture market. But the same thing with all of these names. Then they kind of fade away. You know, what do you think about investors kind of giving them a look, or sometimes I would say rolling the dice with them, because obviously if they're beaten down, there were some issues.
So out of the three of these names, I actually really like Avon as well as Vera Bradley, especially because of the way that they performed after their respective earnings reports. When something gaps up after an earnings report or has had several quarters in a row of positive growth, I think it's a great time to look at it again.
And so you think maybe they're turning around and this could be real?
I do.
Yeah. Listen, I'm not a Vera Bradley fan, but I've seen them blow the cover off the ball many times. I've seen the stock go up. I was shocked when it sort of got derailed here, but it is what it is. But what about a name like Pier 1? I mean, today it's getting hammered. There's some issues with debt. You wouldn't have touched that one.
So Pier 1's a little bit more difficult for me because of the amount that it has fallen today. So when I look at something like that on a percentage basis, and take Boeing, for example, what I want to see is I want to see something fall kind of within the expected move, or maybe twice the expected move on the week. And then what I want to see is I want to see it kind of even out and then start to shift higher, and then I would give it a look. But at this point, I still have to wait.
If someone wanted to buy a high-risk name, a name that might have been $40 a few years ago, and now it's a $4 stock, is there special instructions to protect themselves to the downside? Do you use a stop loss?
When something's that low of a price point, I typically don't. I'm typically risking the amount of capital that I'm putting into the trade. But what I'm always going to do in this type of situation, when something was $40 and now it's down to $4, is just like I said. I mean, I want to watch for that pattern to form where it starts to level out,
and then it starts to trade up.
Yes, and then once it starts to shift higher, that's telling me it's time to go for it.
One name you own is a classic example of this Chegg. I remember it was a hot IPO, the school book thing. The stock was $4 a few years ago. Now it's $41. You still like this?
I really like Chegg, and if you think about it, student debt right now is huge. The cost of college is just incredible, and students have to figure out a way to save money. That's what Chegg does. Chegg lets you rent your books.
Students and millennials, that's part of your investment thesis. You like a lot of other millennial-associated names, too.
Yes, that's correct, because you have to look at it this way. You have to look at the way that millennials are spending their money. You know, we value experience over possessions, and that's showing in specific stock charts. We also really like natural foods, and we like to give natural foods to our dogs. So FreshPet is another favorite of mine.
LiveNation, Chegg, the school book company.
Yes, exactly.
All right, cool. Well, thank you very much, Danielle. Really appreciate it.